Okay, my top-down analysis on EU. I usually start on the weekly. So what do I currently see? Okay, let's just see on the 1 month. Okay. So on the 1 month, what do we see? Breaks of structure here. So obviously, if it broke this certain high, we're expecting higher highs, higher lows. Basic again. Higher highs, higher low, higher highs, higher low, higher high. So we're expecting at the current situation, maybe a push to the higher side. Let's just say it's more probabilistic to hit this side rather than this side. Since we broke this part of structure, so we're expecting a new higher high. Expecting a new higher high. So currently on the monthly, I see bullishness. Okay, so we're wanting price to push up higher. Now let's go to the weekly. Let's go down to the weekly. Do we see at the current moment? Let's just zoom in. So currently price was up here. Made a low. They made a maybe a lower low. Oh no, sorry, lower high. Broke the structure, which is a confirmation for its lower high name. For its name lower high. Broke this, created a lower low. Great, and this could be called a lower high once it broke this part. So as soon as it broke this zone, this is technically now called not the lower low. This could be called the lower low, and this could be called the lower high. Now, we pull back. Wait, hold up. Oh my word. So we pull back to this zone. Now we have this low, right? Now what do we see on this low? A break of structure. So if we see a break of structure of a certain low, we're expecting this, a new lower high. So currently I see this as a lower high. Broke structure of the certain lower low. So this is the new lower low. Now we're expecting price not to get above the lower high. But price went above the lower high. So it broke this structure, also broke this structure. So what does that mean? We shift our bias. Instead of our bias at this point, we were, what do you call this? Yeah, we were bearish. Now we move up to being bullish since it broke this structure. It broke this structure. Wait, yeah, I broke this structure. So we're expecting another simple thing. So the thing about trading, it's more effective when it's simple, you know. So if you have noticed, I just look for structure. So what do we see? I'm expecting this to get broken and price to maybe pull back. Price to go higher, make a new higher high since it broke the structure. So we're expecting a new higher high, higher high, higher low, higher high. So we're expecting this point. Now, what we're waiting for EU is still to break the structure. So that's where we're waiting. So currently on the weekly time frame, we want EU to push higher. But if we go down to the daily time frame, so basically this is just my 3 rules, which credits to Ment FX. One of my teachers, he taught me, he shared this. We also have the same rules, 3 rules. Basic, you look for structure, order flow. Oh, hello 11, we just started. Structure, structure, POI, yes, POI. Or order blocks. Then rule 3 is confirmation, which is Wyckoff. So that's basically my 3 simple rules, which for me works for me, it works. So first of all, we're looking for structure. So in the daily time frame, if you just look at this point, we're at EU, Euro USD. So what do we see? Let's just start at this point to simplify things. Pull back, a higher high. So we're expecting either this to happen, since technically that is still a a higher low, but it did not happen. It broke this structure right here. So I would consider this lower part to be the new higher low, since it broke the recent higher high. With a higher high, made another higher high. So we're expecting the price not to go below the higher low. So right currently we're here now. So on this certain current structure, we're still expecting bullishness. Okay. Why do we expect bullishness? Since it did not break the structure or go below the higher low. So basically, if you remember from back then in school, in the retail days, that's what we call it, retail days or old school days. There's a certain pattern, you know, higher high, higher low, higher high, higher low, higher high. Now, what we believe as smart money traders or SMC or institutional traders, if price goes below higher low, it is a sign, one of the signs of either liquidity grab or a break of structure and a shift of trend, which is bearishness. So that's a simple thing. That's a simple rule. So if it breaks that, the higher low, then we shift to a lower high, a lower low, a lower low, and a lower high. Basic. So right now, in the daily time frame, I'm still expecting price to go to the higher side. Now, if you just zoom in, this, let's just say in the 4-hour time frame. Do we see on structure? We see multiple stories, okay? Let's just say this is the 4-hour. So 4-hour broke this. Let's just go back to the daily. Let's just zoom in. So what do we see? The structure, we see a break of structure here. So what does that mean? Again, if it broke structure below, we're expecting a lower high, then continue to the downside. I'm not saying I'm predicting it, but it's the most probabilistic thing since it broke this structure. Basically, we're in a bearish market. But if price went higher on this part, when broke that, then I'm saying it's bullish since it went above this. So basically, I don't know, maybe some of you know about protected highs and protected lows. I'm just gonna mention it because I'm getting confused. So basically, this is a protected high. I mean, protected high. Then basically, so yeah, this is the protected high, and this is the target. So hello, Mallet. I think your mic's on. Can you please mute it? Thank you. So yeah. So currently, what does this mean when it says protected? We don't want price to go up higher. So that's the meaning of protected highs. But if price went higher, then we're expected to shift our bias, basically shift this to our protected. Then we move this as the bottom part is protected, and the high point, the new higher high, is the target. Basically, the target is where we want price to hit first, or the most probabilistic area where price might hit, or basically it's just liquidity. So we see this as a target, this point here. See at the target, we see a protected high. So we're expecting price, basic structure, guys. Lower high, lower low, lower high, lower low. We're expecting lower high and lower low. So right now, even though it broke this structure, it's more probabilistic. Even if price was here at this time, it's more probabilistic for price to go down and hit this target zone, since this is a protected high, meaning we're in a bearish downtrend. So right now, what do you see as I drew? We're expecting a pullback. A pullback to where? Maybe an order block right here. So price could go on the lower, much lower time frame. Price could form bullishness. Just come to mitigate that and fill that order block, so he can continue then breaking the structure right here and create a new lower low. Then same thing again. Oops. Same thing again. There's an order block here. Then we want price on the lower time frame, create bullishness, come and mitigate that order block. Then we want it to break structure again to continue creating lower lows since we're in a bearish market. So let's just go back. Oh, my arm. So we're expecting bullishness on the lower time frame. Now if you look at here, if you mark this on the lower time frame, let's just go on the 1 hour. If you mark this went above this line, meaning for me that's a break of structure right there. It went above this recent high. So what does that mean? Basic structure again. Great. Broke above, so technically this is a higher high, so we're expecting price to do this again. So right now, on the much lower time frame again, if you see the drawing, there's the orange line. If you see this orange line, so we're expecting price to do a pullback. So where does it want to pull back? Now this is the thing about smart money or order blocks. Let's just go to the 4R. Let's make it simple. Multiple order blocks, order blocks, order blocks. This is not a good idea to mark every order block and to trade every order block. Here, it's not a good idea because basically you could get screwed up. Since there's multiple order blocks, you could take maybe 3 losses. So that's why what I did, I went to a higher time frame to clear myself up. So I saw this order block right here. Let me just erase this. See this order block right here, and I see another order block right here. So either way, price can either bounce from here or bounce from here. So I'll say it again. 3 rules. Structure. What is structure doing currently at this point? It broke this high, broke this previous high, so we're expecting bullishness. So I want buys. Rule 2, POI. What's a POI? Order blocks. So I marked up order blocks, significant order blocks, and I'm more confident or more happy marking up order blocks with imbalances above them, since basically it's more probabilistic for price to get lower and fill it, and also fill the imbalances and also fill the order block. So at this moment, now rule 3, we wait for confirmation. Now wait for confirmation. What I use is Wyckoff. So at this point, doesn't mean for me, doesn't mean I marked up this order block. I would then just simply do this. Buy, oops, my trading view's messed up. Buy, then let's just say, let's go to the high. So yeah, that's not how I do it. I wait for confirmation because price could technically just create liquidity and go lower. Now what I do to look for confirmation is I wait for Wyckoff. So creation of liquidity, let's just simplify Wyckoff. Spring, then breaks of structure, break of all the structure, then I enter on these points. At here, there should be an order block here, or maybe order block here, but basically that's how I enter with Wyckoff. Let's put it red. So meaning I have confirmation, which gives more gives more statistics, or gives maybe 3% more on my win rate because I waited for confirmation, which is Wyckoff. It also gives me better RR. Let's just say my TP is on this high, since remember on the bigger picture, we're currently bullish, so we're expecting price to pull back, then break through, meaning break this structure. So this is the more probabilistic area for price to come up and break. Now, I have Wyckoff, gives me more probable win rate because I waited for confirmation. It also gave me better RR. So instead of just taking this as your entry, which is the high, it's 2.37 RR, or even doing the 50% of this OB, which is 5.3 RR, which is still fine, I mark up this on the smaller time frame order block or the Wyckoff order block, and I see a 7.8 RR, which is better RR. Also, better RR and better win rate since we waited for confirmation. Because basically Wyckoff, this is an accumulation, is creating liquidity, liquidating those, bringing retail traders to sell even more, but ended up stopping them out because they didn't see the real move, or they didn't see where the big banks would actually want price to bring it. So that's my analysis on EU. So currently, I'm waiting maybe on the 5-minute time frame. No, on the 15-minute. I'm waiting for. So basically, I'm just waiting for Wyckoff. Basically, this orange line to form up. So if I see Wyckoff, I'd be happy. I'd risk manage because this is not 100% win rate or 99% win rate. But I would wait for Wyckoff, then have my entry on that order block. So I'll give you an example because I teach better when I explain my trades, or basically trade breakdowns. So last week I took a trade on, I believe, let me just do a breakdown. Wait, I'm looking for my EU, this one. So I hope you can see. Oh, you can't see. Hold up. Share screen one. There it is. Yeah, I believe you guys can see now. So this is my last trade. Yeah, this was my last trade last week. So I'll explain it to you, or give a breakdown. So it was this point. Let's just do a replay. I believe it was here. Yeah. So price was currently bullish. I mean bearish. I'm sorry. So let's do the 3 simple rules again. Structure. What is structure doing? Bearish. Let's just say price is at this point. So what are we expecting? Not to go higher than the lower high. Because if we go higher than the lower high, then basically we're creating a new higher high, higher low, higher high, higher low. So we're wanting to buy that. But currently in the past, it's been doing a bearish move down. So we're expecting price to pull back on any of these order blocks or POI. Then we're expecting price to go lower. So that was my markup. So structure, bearish. Rule 2, we look for POIs. So I believe I marked this up like this. Yeah. So you see there's an order block there and a juicy imbalance, which is also good. Then that's rule 2, POI. Structure, rule 1, structure. What is structure doing? Bearish, creating lower highs, lower low, lower highs, lower low. We're expecting another lower high. Then continue to the downside, lower low. Rule 2, POI. We found this beautiful order block, which is relatively below this lower high, and also has imbalance and has been unmitigated. Then we wait. For rule 3, which is confirmation, basically Wyckoff. We then go on the lower time frame. I believe it's in the 5-minute. So if you guys know Wyckoff, I'll mark this up. I'll see this as a UTAD. Oops, UTAD. Or basically, oh my gosh, my thing is broken. UT/UTAD. Technically, this is a schematic too. It doesn't have a UT. This could be an ST, creation of liquidity. And, oh my word, this could be a buying climax. So Wyckoff is valid when it breaks its certain structure. So the structure point of Wyckoff is this point, which is the sign of strength. Sign of weakness. So as soon as price went down, it went down aggressively. I then said, oh, it's confirmed. We have Wyckoff. It meets my 3 simple rules. I then mark off my Wyckoff. This is this box. Then, as I said earlier, I then look for a order block, which was, I believe, on the 1-minute. I think, yeah, it was this one. UI. So if you see that order block right there, also we had that good imbalance, which we saw that it got filled. So I had then a sell limit right there. Oops. Sell limit. Stop loss was 2.3 pips. Then my target was basically this low. So remember earlier we had a lower low, and obviously we're expecting a lower high, then a new lower low since our structure is forming bearishness. So I want to target here. So mark that up. So target, then I'll put my TP here, which is a good 13 to 1. Doesn't mean, let's just say I risked 1%, doesn't mean if I won on this, I'd receive 13%. That's not how I do. I can't live like that because your win rate could drop maybe to 20% since you're not partialing or you're not trailing your stop or moving your stop to break even. Price could just get back at you, then continue go lower. That's why I do partials and move my stop. So my partial zone was at this OB right here. Wait, let me check. OB, oh, my bad. My bad. It was here. This open of the OB, because price, again, partial. Again, why did I mark this as the partial zone? Because price, if you look at a certain structure, price could do this. It's the same thing we did over and over. Price could, since it broke this structure, so we're expecting a higher high, we're expecting a higher low, then another higher high. So price could either touch my partial, then I'd save some money. I've scaled down and I move my stop to my entry point. So if price went and touched the OB, it could then just run, and I'd be still happy because I made a little bit of money since I partialed and moved my stop to my entry point. Now if then I had my second partial at the low here. So if we play this out, I partialed here and I partialed again. Then as soon as the price hit my first partial, I then move my stop exactly to entry point. No, wrong one. My entry point. Then as soon as partial hit this as soon as price hit the second partial, I then move my stop to this point. Why did I move that to that point? Let me explain. Because if you can see, we have an OB. So basically, again with the structure, price could then broke this low, price could continue doing this. So basically price could either touch this OB or do a liquidity grab, then go lower. That's why I don't put my trailing stop on exactly at this point at the high, but I move it a little bit higher than that because price could technically do a liquidity grab and go lower. So that's what price exactly did, but it did hit my stop loss because it had other plans. You'll see, continue, and it did hit my stop loss right there, my trailing stop. So basically that's why I do partials and trail my stop, because if you have very high RR trades or high RR setups, your win rate can go dramatically down. So you can, if you don't partial and trail your stop, your win rate could be 20%. So basically you could lose 8 times in a row, or you could lose 8 times and only win 2 times on a trade. But technically that is still profitable, since let's just say you risked 1%, so that's a 13%. So if you lost 8 times, which is negative 8%, you basically made profit on this one trade since it's 13%. So yeah, that's basically how I do top down. I think I messed up on some explanations because I've been up all day. I'm not really in the mood, but usually I don't really teach this slow. I usually give more information, but yeah, basically that's how I do top down. So yeah, that's how I do top down.